Hey everyone, welcome back to Corporate Decoder, the place where we dissect the money moves of the corporate world and sometimes end up with a bit of a pickle. Today we're looking at Teads Holding Company and their latest filing, which is basically telling stock market gods that Teads is having a bit of a rough time keeping its stock price up. Stick around to find out what this means and if they can pull themselves out of this hole. Don't forget to subscribe and join our Discord community, linked in the description below. We're a bunch of finance nerds making sense of all this corporate jargon. So what is the big news? Okay, so Teads Holding Company received a notice from the Nasdaq stock market. Now this isn't a notice to pack their bags just yet, but it is a heads up that they're not meeting a basic requirement. This requirement is all about the price of their stock. Nasdaq wants the stock price to stay above $1 for a certain number of days. Think of it like a minimum entry fee to stay on the big board. Teads common stock has dipped below this $1 mark, meaning its value has been a bit too low for too long. Specifically, the filing says their closing bid price has been below $1 for 30 consecutive business days. This notice came out on the 22nd of December 2025. Now that may sound like a big deal, but the good news for Teads is that the stock is still trading. It hasn't been kicked off the Nasdaq Global Select Market yet, and their symbol TED is still there. This notice does not affect their day business or their reporting to the Securities and Exchange Commission. So what happens next? Teads has a grace period, an initial period of 180 calendar days, which is about 6 months to fix this problem. This means they have until the 22nd of June 2026 to get that stock price back up to at least $1 and keep it there for 10 straight business days. How will they do this? Well, the company is looking at options. One of the main things they might consider is a reverse stock split. Now, a reverse stock split sounds complicated, but it is actually pretty simple. Imagine you have $10 bills and you want to make them look like fewer bills. You might swap those 10 $1 bills for one $10 bill. It doesn't change your total money, but it increases the price per bill. In a stock split, if Teads had, say, 100 million shares trading at 50 cents each, they could do a 1 for 10 reverse split, turning it into 10 million shares each. Now, trading at $5, this makes each share worth more on paper and helps them meet that minimum price requirement. Now, if they can't fix it in the first 6 months, there might be a second chance. They could potentially move to a different segment of the Nasdaq called the Nasdaq Capital Market. This market sometimes offers an additional 180-day period to comply. However, to do this, they'd need to meet other listing requirements for that market, like the market value of their publicly held shares, which is basically the total value of all their shares that are not owned by insiders. They'd also have to commit to fixing the bid price issue during that second grace period, which again likely means a reverse stock split. But here is the reality check. The company itself states that there can be no assurance that they will be able to regain compliance. This means even with these options, it is not a sure thing. If they fail to meet the requirements by the deadline, Nasdaq could delist their stock. They could try to appeal this delisting, but again, there is no guarantee it will be successful. This whole filing is what we call a forward-looking statement. It's a look into the future, but with a big disclaimer. The company is basically saying, here is what we think might happen, but there are a lot of risks and uncertainties. You'll see words like may, will, should, expects, and plans. These are all indicators that the company is talking about expectations, not guarantees. They're being upfront about the risks involved, including their ability to meet Nasdaq's rules, and whether Nasdaq will actually grant them any leniency. They also mention the potential negative impact on their stock price and how easily people can buy or sell it if it gets delisted. This is why they refer you to their other reports like the annual report on Form 10-K and quarterly reports on Form 10-Q, which contain more detailed risk factors. The company is also very clear that they do not promise to update these future statements. If things change, they are not obligated to tell you unless the law requires it. So when you read these, you have to understand they are snapshots in time based on what the company knows now. Now, looking at this filing from a broader perspective, alright, so what does this all mean? Teads is facing a classic problem for many smaller companies. Their stock price has been too low for too long, and Nasdaq is putting them on notice. The immediate threat isn't that they're going out of business, but that their stock could be delisted from a major exchange. This would make it harder to attract investors and could significantly hurt the stock's liquidity, meaning it would be harder for people to buy or sell shares. The mention of a reverse stock split is a common strategy, but it doesn't magically fix the underlying business issues that cause the stock price to fall in the first place. It is like rearranging the deck chairs on the Titanic. If the company isn't growing or profitable, the stock price will likely continue to struggle even after a split. The company's own language about no assurance and the inherent risks suggests they are aware of the significant challenge ahead. They are exploring options, but there is a real possibility that they will not be able to meet the compliance deadline. This situation often leads to increased volatility in the stock price as investors try to guess the company's next move. The key here is to watch if Teads can implement a strategy that not only boosts the stock price artificially through a split, but more importantly, genuinely improves the company's financial performance and outlook. Without that deeper improvement, the delisting threat will likely remain unless they find a buyer or a strategic partnership. So that is our breakdown of Teads Holding Company's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.